Good afternoon, everyone. I'll now call the Finance and Responsible Governance Committee meeting to order. This meeting is being held in person and electronically in accordance with the Municipal Act. For the consent items, I'll read out the title associated with the recommended motions printed on the agenda to see if members of committee would like to deal with them on consent or hold the item for discussion. Items that are not held will be deemed approved on consent with no further discussion. They will then move forward to the next general committee meeting for consideration. So prior to our two presentations, when we go through the reports, there's two advisory reports to be received. The first is 6.1, Report of the International Relations Advisory Committee, dated October the 8th, 2024. And that's approved on consent. The second one is 6.2, Report of the Investment Board, dated November the 12th, 2024. And that's approved on consent. Number 7, Reports of Officers of the Corporation, 7.1, 2025 Business Plan and Budget, City Operations and Infrastructure Investment Funding portions. And that's approved on consent. Number 9, community project submissions. There's only one community project submission to be discussed, submitted by myself in regards to graffiti removal. 9.1, which is community project fund submission, again by myself, in regards to graffiti removal in Ward 7. And that's approved on consent. Okay, just to go back a little bit to 7.1, if I could have somebody, just as it's in relation to our presentation. Thank you, Deputy Mayor Thompson. You're a step ahead of me here. With that being said, so we have two presentations on the agenda this afternoon. The first one, 3.1, presentation concerning the 2024 Audit Service Plan. I'd like to now call upon representatives from Deloitte to deliver their presentation.
Thank you so much. Through the chair, my name is Lillian Chung. I'm an audit partner at Deloitte, specializing in public sector audit and accounting. And I'm joined by Katie Devins, who is our audit manager. We've both been serving the city and representing you as your audit representatives for the past couple of years. So happy to be here today and to have the opportunity to walk you through our 2024 audit plan for the year. We will be fairly high level with our remarks, but we'll open up for questions as there may be. Our audit plan document, which has been included within your package, outlines our audit approach and the areas of audit focus for this year. Consistent with previous years, our audit is on the consolidated financial statements of the City of Barrie, including any of the smaller subsidiaries that are included within the consolidated statements themselves. As part of the audit plan process, we do discuss with management and assess our knowledge of the facts and circumstances affecting the city's financials for the year and identify our audit risks. We have identified 4 areas of audit risks that we wanted to highlight for the committee's information, which I will ask Katie to discuss a little bit later on. As part of our audit plan document, we also identified to you the concept of materiality. Materiality is a numeric figure that we rely on to help us determine the extent of testing that we perform as part of the audit and to help us identify areas of audit interest and risk. We will be performing our audit according to this materiality level, and also will be reporting back to you on our final audit materiality level, which is necessarily at this point preliminary, given that we do need the city's final figures for the year end before we can finalize that amount. Of more importance to the committee is that we do determine a concept that we call the clearly trivial threshold, which is typically determined as 5% of our overall materiality level. So this figure helps us to determine which errors, if we identify any as part of the audit, must be taken back to the committee and reported to you. Typically, any errors above this threshold, we do request the committee to make those adjustments in the financial statements. As part of the overall audit as well, we do assess the risk of fraud. This is part of our overall responsibilities as your auditors. For every single audit that we perform, we do have a responsibility to consider where in the financial statement process fraud could occur. And we do identify specifically procedures that we perform to focus on these areas, which we will discuss a little bit later on as well. And with that, I will ask Katie to actually go through the 4 areas of audit risk and then open up for any questions you may have for us.
Thank you, Lillian. If we just actually want to go to page 3 on the audit service report. Okay, perfect. So one more page. Sorry, 2 more pages. It's page 3. Perfect. Sorry, one more page. Yeah, there we go. Perfect. So the first 2 risks we have listed here are revenue recognition and management override of controls. These are not special to the City of Barrie. We generally see this for most, if not all, audits. For revenue recognition, we have specifically pinpointed to a couple of the revenue streams listed here. And again, these are not like original to City of Barrie and are seen in most audits. Next page, please. Next up, we have the implementation of new accounting and auditing standards. So we have the 3 listed here. And then the second one on this page relates to the CAS 600 group audit standard. This has changed in the current year, but does not impact the financial statements. It's more about our documentation on the audit side. And then same with the new accounting standards. Again, not much change on the financial statements, but more about documentation on our side. I'll hand it back to Lillian for the rest of the presentation.
Perfect. And that's really all we wanted to present. I would say overall, our audit plan is very consistent with previous years, with the exception of the 2 areas related to accounting and auditing standards that are changing in the current year necessarily. Happy to take questions if you have any for us on the plan.
Great. Thank you for your presentation. Do any members of committee have any questions for the presenters? Any members of non-committee? Okay, great. Thank you very much for your presentation. And I know in reviewing it ahead of your presentation, it was quite detailed and always good to have that outside view looking in to identify potential soft points. And I'm sure Ms. McGregor and her team will take all the points into consideration, as I know on a yearly basis they do great work themselves. So again, thank you for everything that you do for us, and thank you for your presentation today.
Thanks so much. Take care.
I will now call upon Mayor Nuttall to provide some remarks regarding the presentation for the 2025 Budget and Business Plan presentation.
Yeah, thank you, Chair Harvey, for the opportunity. And this is going to come a little bit differently than it normally does because we have obviously the responsibilities related to the budget are now those of the mayor due to the strong mayor legislation that came forward. And we did a bit of a transition last year in this direction. I think we've done a little bit more of a transition this year. And certainly I can say that I'm incredibly proud of the work that our public servants have done over the last year to get us into this position and provide this type of recommendation for the budget. We'll see if this works, which it doesn't. Carl, is there any way that you can... So just to go over some highlights before I hand it over to those who are actually responsible for crafting the budget is the direction that I had given in June was to continue with a 0% for the city's operations budget. And that's in line with the first 2 years, so 23, 24, now 25. In that same direction, I also outlined for 2026 that it would be the expectation to continue with this line as well. At the same time, as we have done in the past 24 months, we are putting an investment in infrastructure as a real charge of what we've been tasked to do by the community, to fix the roads, to invest in infrastructure in each of our wards and around the city, and to get those projects done that have been talked about for so long. And when you think about Bryan Drive, that's a real example that came into fruition this year, where we have the first half of Bryan complete, and that thanks to all the work that our public servants have done over the last number of years. If you can go to the next slide there, Carl. And again, I probably jumped ahead, but you know, some of the projects, not just Bryan Drive, but some of the projects around the city, you see Duckworth there, the amount of road pothole fixing and repaving that's being done. I don't think anybody would argue that there's an immense amount of work happening to fix our city's infrastructure. Some of that is above grade, where we see the repaving being done, and some of that's below, where we see sewers and water works being put in as well. Next slide, please. You'll see Fire Station 6 is on our bottom right-hand side on the slide. That's something that we've looked at for about a decade. It was to do with the planning of the southeast portion of the city in the Hewitt Secondary Plan. We have, as you'll see in the staff report, the Performing Arts Center at the location down on the waterfront being included. There's items over on Edgehill Drive where there's not been any sidewalks forever. There's looking at Little Lake and how to make it more accessible for the community as well. There's lighting. There's a splash pad that has been asked for in Southwest Barrie for quite a number of years. We have our recreation center in Southeast Barrie that I know that is something that, well, it's been 20 years, quite frankly, since we had initially planned to build that Hewitt's rec center. And so to see these things now coming into fruition, I think is there's some major steps forward for the city of Barrie. Next slide, please. So, as I said in the beginning, you know, our staff have worked incredibly hard, and prioritization, constant reprioritization to make sure that the projects that we're working on as a city are the ones we need to be is taking place. Efficiencies. When you look into the budget binders and you see the amount of work that's done by so many departments, all of our departments, to find efficiencies, to save man hours, to look at ways of doing things faster, cheaper, stronger. I mean, it is an immense amount of work that touches every part of the corporation. It's only because of that work that's being done are we actually able to proceed with this 0% on the city's operating budget. The other piece I think that's really important is not only are we investing in infrastructure, but we've also proceeded with really looking at our reserves and seeing contributions take place in a meaningful way. And that'll continue over the next couple of years as well with the IIR continuing. But the effect of all of these things has resulted in our AA plus rating not only being maintained at stable, but increased to positive. I think for the first time in our city's history, we're on the doorstep of being able to hit AAA rating. I'm not suggesting it'll happen this year. I think these things take longer to occur, but it is overall a very good story and about the health of our city finances. And that really is on the backs of all of our finance department staff, along with the rest of the corporation who makes who make very difficult choices to make sure that we can provide the services we need to while living within our means. So I will pass it off now, I think, over to Craig. And you can have the clicker and it might work from there.
Hello? Yeah, works. Okay. Chair Harvey, members of council, welcome to budget night. Before I begin, I would like to just take a moment to thank the team that's really been working hard to get the budget binder that you have here. The budget team here, John and Adam, they've been coordinating with all the departments across the city to make sure that capital budgets are ready and operating budgets are done. That performance plans, which include KPIs and strategies, they're all in there. As well, we have Kelly Oakley on the CAM team. They have a particular interest in the capital side, as a large amount of the capital binder is their work. And then we have the comms team that put it all together. So big thanks to everyone there. So I have a short agenda here. Typically, we just go through the budget, the operating, the capital, but there are implications of the decisions that are made tonight. And what I want to do is give you a lens from the financial team's point of view. We're looking to put the city on a path to financial sustainability. And so with that in mind, I wanted to just show you really what it is we think of. It comes down to your capital plan, your debt, and your reserves. How does the reserves and debt fund your capital plan? So we look a bit more detail into that. What I want to do is just start with an overview of the 2025 budget, a kind of cheat sheet for you if you want. Obviously, you've read the binders, I'm sure, many times, so these numbers won't be a surprise to you. So our operating budget, we'll go into this later, it's a large pie, is 343 million. Now that's the gross amount, it's not the net amount. On the capital side, you see that we've got 371 million budgeted for 2025. Now that's the total amount that we could spend in that year based on approvals. I don't anticipate we'll spend that much, but that's what we have on the capital side, and those two numbers make up our total budget. The 5-year capital plan, we're starting to look into the long-range financial plan here, and as you can see, we've come down a little bit from last year. And what that means is we should have, it puts less pressure on the reserves and the debt. And as we move forward, you can actually see that here. So these are some of the reserve and debt numbers I think are quite useful. Now, the Mayor just commented, S&P last month gave us an improvement in our outlook for the credit rating. Fun fact, our credit rating is better than any province in the country, so I just thought I'd mention that. But what the outlook does is it says when there's a change in the outlook, it means that the credit rating agency is looking at changing the rating that you're at. So if it goes from stable to negative, it means there could be a downgrade coming. If it goes from stable to positive, it means an upgrade could be coming. And that typically takes between 6 months and 18 months. So we may see a change, depends, on obviously a number of factors. But one of the reasons that we got that increase, there are 5 factors that go into a credit rating. One of them is the debt burden. Our debt burden has improved significantly over the last 4 or 5 years. Our peak debt was in 2021, we had around 331 million. We're now at 271 million, forecast to come down to 254. So, and in that time, we're also forecasting to increase our debt, have a debt issuance of around 135 million, which is half the debt that we currently have. Now, the major factors of this 135 million are development charge debt and tax levy debt. This isn't a guarantee that we'll issue this. This is just based on what we're forecasting right now. If reserve levels are better or the interest rate environment is different, that number will change. On the reserve side, you can see that we're anticipating a $120 million increase in reserves over the 5-year period. That sounds a lot, that is a lot, but it has to be taken in context of what it is that we have backing all these, the rehab costs and the growth costs that we have to consider. Key features of the budget. Actually, the Mayor's gone through most of this. It's the Mayor's budget. We have a 0% increase for the 3rd straight year. We have an IIF contribution of 2% that goes towards tax levy assets and stormwater assets. And then the long-range side where we're seeing a prioritisation of the capital plan that's bringing a lowering of our debt and an improvement in our reserves. So going over to the operating budget, I've put identifiers in the corners if people want to follow along in their budget, make it a little more interactive and fun. And as I said, it's a 0% increase that we were directed to go to. We get to 0% through a building block approach, and this is a table. You'll have seen this in a number of years, the last number of years. The biggest impact, the biggest number here obviously is the maintaining services. That's made up from a number of areas. Contracted services are a big part of that, and we're seeing much higher than inflation increases there. They're putting pressure on. We also have 2% increases for salary for QP staff. Firefighters have their own increase, which I think is being negotiated soon, maybe this year. And there's also some firefighters that have been pre-approved for 24 and 25 that are part of this number. Offsetting that are expected investment returns and also user fees that we anticipate coming in. The operational subsidy I've included there is basically just letting everyone know this was brought in a number of years ago to try and help keep the tax rate down. It's increased to around 4.9 million. That comes out of the reinvestment reserve. And I know I remember the Mayor saying that he wanted this to come down. So there'll be a long-term plan to try and take that reserve off of the base so that we can start using the reserve for more of Council's objectives. Debt management, we had an IO loan in 2014. It got retired this year, so that's given back some money. The reserve contributions, there's been a slight decrease in those. It doesn't have a particularly big impact. But the new investment and service recommendations, they're on, I think, page 20 of your budget binder. And what happens is the executive management team get a very long list of asks from the departments. As part of our budget deliberations, we bring forward the capital budget and the operating budget. We chat with EMT. The department heads put forward their service recommendations, and that list gets battered around and then eventually whittled down to the thing that you see in page 20 of the budget binder. Offsetting all this is the assessment growth, which we anticipate to be around 6 million next year, basically from new residents coming into the houses that are being built. Quick overview of the operating summary. You can see that on the expenditure side, debt servicing, transfer to reserves, salary and benefits, and general operations make up most of our expenditures. It's 97%. I'm more interested in the right-hand side because I'm a finance person. So it's paid mostly from the tax levy. There's also a large contribution from reserves amount. That is from the financing charges for DC debt comes out of there. And also there's a contribution from capital recoveries, which, so there's some capital projects that staff are working on that we can recover through capital there. And fees are another big portion. That's transit fees, recreation fees, late fees. So they make up a large portion of the operating revenue. At the same time, we're bringing forward the presentation. We're also bringing forward the staff report, which almost got through, but somebody pulled it back. In there is, there's 3 recommendations. This doesn't affect the tax levy, but these are really just housekeeping items. There's more detail in the report, but we need some of these put forward so that journal entries can be made and transfers can be made to reserves. As well as bringing forward the tax rate budget, we have the user rate budget. So the rates that you're seeing here are based off the 2021 financial plan that was brought forward. Water has to follow the Safe Water Drinking Act and have a full cost recovery pricing system in place. And so that's what we have. Wastewater doesn't have legislation similar to that, but there is the ministry encourages you to have a similar approach. So we have full cost recovery system in place for wastewater as well. On the parking front, this is the first year where it's going to be self-sustaining, so that's good news. A major part of that is the Collier parking debt was retired this year. And with that, we're on to capital. Capital is really, there's a number of things that go into the capital plan. The strategy, obviously, what does council want to do? But what we're looking at, really, it comes down to growth and rehabilitation. And so we're following what the growth management plans are saying. And then the CAM team, they have their risk-based approach to project selection. They give us what the rehabilitation project should be. Offsetting all of this is the resources that we have available, both financial and staff. So we make sure that we have that in place so that the capital plan can move forward. And what's in the plan? Now, the plan's made up of previously approved projects and requests. Now, the previously approved come into two categories. The one on the left, you see the carry forward. That's for approvals that have happened before 2025. So from 2024 and beforehand, that's projects that haven't been completed or closed out are in there. And I will say that's an estimate. I have heard from certain EMT members that that number will probably come down because a lot of projects are going to be built or finalised in the last few months of the year. We came up with that number in September, October. So that will probably be lower. The previously approved number of 308, that came in previous budgets for the years 25 to 28. And you're being asked to approve 134 million, which gives us our 648 million number. And some of the key projects here are on the right-hand side, if there's any that you're particularly interested in. So what I want to do is just look at the budgeting for, if I just go back, the 134 and the 308. This is the amount that comes in for 25 to 29. The projects that are built around there. Most of the expenditure is on the infrastructure side. As you can see, it's over half of it is infrastructure. Again, as a finance person, I really only care about the right-hand side and how it's being funded. So you can see that the DCs are paying a significant portion. That's almost a third, and there'll be some DCs and debenture proceeds as well. So a large portion of that is growth, or that's all growth. On the tax capital reserve, I am keeping an eye on because that will pay for partially for growth, partially for rehabilitation. That's a big ask that's coming out of there. And the user rate reserves. If you take a step back, you can see the capital plan on the left-hand side, those are our expenditures. And on the right-hand side, everything is paid by debt and reserves, with the exception of a small amount of grants. But really, that's what we're looking at. How do we fund the capital plan? It comes down to debt and reserves. Again, as I said, the staff report came forward, and occasionally, every year, projects will come in after our deadlines. So because we're already working in commentary, we have pie charts, graphs, tables, it's difficult for us to include projects after the deadlines because then we have to change all these things and it can affect all that. So what we do is we put it in the staff report and then you can comment on them there. So just making you aware that they're in the staff report. And then we get to financial sustainability, which is what long-range planning is all about. I think before I continue, I should highlight what financial sustainability is so that we have a clear understanding of what it is we're aiming at. So as a city, Barrie would be considered financially sustainable if it can accommodate growth without unacceptable debt or tax levy increases, if it can maintain its infrastructure in a state of good repair and replace it when needed, if service levels can be increased as the city urbanises, if service levels can be maintained in the face of some kind of economic shock, for example, a pandemic. And underlying all this is the idea that the financial responsibility for all of this is equally shared between future and current residents, something that's termed intergenerational equity. And so this is our long-range plan. It looks simple. There's a lot of work that goes into it. But really what we're trying to do is manage our capital plan, reduce our reliance on debt, and save for the future. Those are the three things. And we're trying to make sure that we kind of optimize relationships here so that we minimize the financial costs of our activity and use our resources as efficiently as possible. Underlying that is the intergenerational equity idea. And that's basically saying that the generation of people using an asset are the ones that are paying for it. So you don't want to leave, you don't want to kick the can down the road. You want to make everything reasonably equitable. And with that in mind, when you think of rehabilitation, and the CAM team obviously thinks about this a lot, infrastructure is a lot cheaper in the early years than it is in the later years when the life cycle costs of rehabilitation and replacement start to really rear their ugly heads. So that's something that has to be considered when we're looking at rehabilitation. So I do want to go through each of these three items quickly, just to give you an overview of what it's about and where Barrie sits. Barrie's capital plan is made up of growth and rehabilitation. Rehabilitation comes from the CAM team. They look at all the infrastructure we have and what's going to be needed in the next 10, 20 years. On the reserves and the growth side, I used to work in the private sector, so I was always interested, how does the city plan for growth? Somebody gave me this slide at the Region of York, and I think I've used it in about 20 presentations now, because I think it highlights what it is, how you plan for growth. It really comes down to the province in 2006 came up with a growth plan, and they said, we anticipate in the next 25 years, a certain number of people will come to the province, but we think they'll be distributed in this way. And so they gave growth targets to each of the municipalities. Now, this has been updated a number of times, so you may have heard us in the planning team talk about the number 298,000. That's our current growth plan target for the year 2051. So when we're doing our capital plan, we have to think about that. But if we take a look here, you see official plans have to conform to the growth plan. Official plan is obviously very important. It guides a lot of the work we do. And engineers, when they're coming up with their infrastructure master plans, they have to think of infrastructure that will support this 298,000. You go further down, we have to make sure that we're budgeting in our capital plan for the implementation of the master plans. So you can see how there's a kind of domino effect of how all this comes together. And there is a risk if growth doesn't come in at the time it's meant to come in. That's one of the risks that we always have to consider. So, as I said, our capital plan is made up of rehabilitation and growth. The 648 million you saw. There's also a forecast of 700 million. That number will be firmed up as the capital plan progresses, as we become more sure of a project, if it's going to go forward or not. But I'll go into the reserves and the debt with that 1.4 million number, assuming it's completely spent. So on the reserve side, most of the spend is coming from the reserves, as you can see. Now, in your budget binder, you get, I think there's 8 or 9 or 10 reserves. The tax capital, development charges, user rates, they're all theatre, they're all there. What this is a consolidation of all the reserves, every single reserve that the city has. And so at the beginning of the year, we had $370 million in reserves, and we're forecasting having just under 500 million by 2029. Sounds like a lot. It is a lot, but we do have $11 billion worth of assets that we have to consider that at one point will need rehabilitation. We also have a development charges background study that has significant expenditures for growth projects. So there's a lot, again, in the context, that's how we have to consider that. And so I think it's better to really break these down by the funding sources. So funding sources, development charges, notoriously difficult to predict, but our current forecasts are that we may have somewhere in the region of just under 300 million by 2029. Now, again, if we get closer to that date and it turns out we do have money like that, we'll probably advance projects. So we're always looking at whether we have to advance or defer projects, and I would imagine that's what would happen at that point. On the tax levy side, which is the other important reserve, that's needed for growth and it's needed for rehabilitation as well. So it's on a path that it still needs to get higher, but I would say that if you go back 4 or 5, 6 years, the forecast for the tax levy reserves were negative. So we've certainly improved a lot in a short time, but it's part of a process. And again, when we look at reserves, we're always thinking long term. Debt is a great story. As you can see here, we have most of our debt is development charge debt, which means development charges are paying for it. You can see in 28 and 29, there's a slight increase in tax levy and water debt, which what that means is that there may be increases for the tax levy anyway. There'll be tax levy increases, but again, it comes down to what the environment's like at the time. If we have high reserves, we'll probably not issue the debt. If the interest rate environment is good or bad, that would influence whether we issue debt. On the right-hand side, you see the debt servicing cost. I only include that because it brings us into this, which is an annual repayment limit, and this guides the amount of debt you're allowed, because the province, they wanted to make sure that cities or municipalities didn't issue too much debt and not have enough to fund their operating expenses. So they brought in this 25% limit. We had a long-range financial plan in 2017, and we brought in our own internal limit of 20%. And as you can see, we're way below these. So we could issue a lot of debt, and it wouldn't have a particularly, it wouldn't be difficult to maintain. And so, just key takeaways. There's been an improvement, a really great improvement in the financial sustainability of the city. We're in several good positions. We have a strong financial policy framework that guides the work that we do. We have debt at a very manageable level for a city our size. There's full cost recovery in water and wastewater, which again is very important on your financial sustainability path. And our reserves have improved considerably from where they were a number of years ago. However, on the challenge front, we do have a very large tax-funded asset base that will need higher tax reserves, so that's something we're planning for going forward. I would also mention that we were asked to bring forward a reserve presentation, and that is something that we are planning on doing, so keep an eye out for that. Apologies, it's not come yet. Here's the next steps. I think you've seen most of these. I would just highlight we've not had too many questions so far. I don't know if that's a good thing. But the budget questions is the email to send anything. If you have any questions, we will try and answer any tonight. If they're particularly difficult, I'll pass to the mayor. It's his budget. And with that, I'm done.
Thank you very much for your presentation, Mr. Gillespie, and I think obviously congratulations goes to all staff with the amount of work that goes into this many, many months ahead of today's presentation to be able to get us to where we are. And obviously this one was a little bit different because it is the mayor's budget, and first time in my time being a resident here for 25 years that I can recall a 0% operational budget. So kudos to those all involved. I think before we get into questions, it's probably best to have Deputy Mayor Thompson put 7.1 on the floor, the 2025 business plan and budget, so that way questions can be asked together.
I'll put the motion on the floor as printed.
Great, thank you. And also too, I'd just like to remind everybody, as mentioned just now, there is the email address when it comes to asking questions, and I don't think today was necessarily the day to inundate staff with a ton of questions, as we do have other committee meetings. But with that being said, I will open the floor for questions, but prior to that, I will give Mayor Nuttall the floor for a moment if he would like to close out or start the questions himself.
Yeah, thanks. Sorry, I was just seeing if we could get this on the board. It doesn't look like we can, but I'm just going to ask members of council to turn to page 48 in their operating budgets. And I think what Craig and his team have been able to accomplish with buy-in from the whole corporation, from all of our public servants, I think it's really clear why we have received the, heads up that there could be an increase to AAA from where we're at. When you look at page 48 and go to the bottom, it's under the heading of sustainability. And I shared this a little bit on Thursday, but it's actually quite something. If you look at the debt per household in 2021-22, you can say, roughly there's $6,000 per household of city debt. And to see that reduce by 25% in 2 years is something I think we should all be really proud of, and really proud of our staff for the work they've done. The debt to reserves going down, the debt to total revenue going down from in the 21-22. Now, The debt to reserves started going down much earlier, but the debt to total revenue, it has really taken a sharp decrease from in 22.73, in 21.80, and today 0.51. And then the final assets to liabilities moving into the positive is another really, really strong indicator of our financial position. When I looked at this kind of said it all. If you didn't want to pay attention to all the work that's done by staff, this kind of tells the story in a Cole's notes, if you will. But that story's not there without you folks. So thank you again so much, because this is just such impressive work from CAO Prowse and throughout the corporation, from our finance department, Craig, from your team. Thank you so much.
Great, thank you. Do any other members of committee have any questions? Councillor Congal.
Thank you, Chair Harvey. And I'll have a question, then maybe a comment on it. So I'll start with you, Mr. Gillespie, and give you the privilege of bouncing this hot potato to the mayor, if you like. But in the reference to coming back with a presentation on the reserves, on the tax reserves, in the context of that, I guess my question is, within that, is there any information that would likely come as part of that presentation with respects to impact factors? So we've been holding the line on 0% operations year over year for the past couple, and we're now positioning for it this year. We're forecasting for it in 2026. At some point in time, we're either going to be needing to draw more pressure out of those tax reserves, or working with less overall, but it will come at a cost, I believe, at some point. And so from a tax reserve presentation, will that consider what we've been putting forward to staff, which is an ask of 0% operating, around the impact of that, and or what will that demand on our reserves?
Thank you. Through you, Chair Harvey. The idea that we have for the reserves are that we're going to look, I think the reserves have to be looked in totality. There's a large number of reserves that we have that could be closed or merged with others. So what we want to do is get an idea of where we stand with the reserves. If there's any monies that can be put and repurposed into reserves, then we would do that. And basically come up with an idea of target levels for very important reserves and make sure that we're following that, so that you as council have an idea what it is, the impacts of certain policy decisions. If you decide that we need more money in a certain reserve, you know what's going in and what's coming out. So with regard to that, I think targets are something that's very important that we should really be focusing on. Reserves are probably the most important part of your financial sustainability. We do have, I think there's 3 or 4 reserves that we know that we have to make changes to. The fleet reserve is one, County of Simcoe, although there may be a change in the amount of draws that are coming from that. The reinvestment reserve needs some help, and the tax stabilisation reserves also, it could be higher. So I think when we whittle down the reserves to the number that we need, then we'll have a better idea what our strategy will be going forward.
And follow up to that, with that strategy, and let me know if it doesn't come hand in hand. I mean, would there be recommendations or kind of a prudent forecast to say, if we continue to hold the line and knowing what we are looking at from a reserve and the drawdown forecasted, at some point in time, what will be that threshold that we will be having to have a pretty serious conversation about around operations, and if that increase is going to be a jumped increase because we've been holding at 0 versus a gradual increase. And so when do we strategically get into those conversations as a council to say 0 might make sense, and we can compliment staff because staff always give us, what we ask, but what's a breaking point? And is it this year? Is it next year? Is it further down the line? But at some point, operating with what we have, while we do still look at amazing pieces tied to Lakehead and other theaters and other pieces, for me, it's then drilling down into operations. So what's the impact to operations specifically when we hold the line? And is there a tipping point when we talk a bit about continuing to ask our public servants to do more with less and still meeting standards and expectations, which you do. But I can't help but think, how do we answer the question to the public, which is, it sounds great. And the majority of people say, thank you for holding the line at zero. Others, when I've got to go to the members of the public, say, is this a good idea? Like, we realize that can we still do what we need to do and still hold the line, because we're not seeing that in other municipalities. We're not seeing that. And we know we're a large urban, but at some point in time, I'm looking for more around with the information to say, if we can do it, great. But I trying not to be naive to think that this won't come at a cost at some point down the line. And if that means we can recover holding this line in time because we can build back into tax reserves and we can then have the money to do that, wonderful. But for me, that's still a blind spot at this point in time as to what is the long-term impact of some of these decisions from an operational cost.
So I think that's probably a political question.
Okay,
not
so
a
redirect
question
to
of
you,
our-
Mayor.
Yeah, not a question of our staff. I think that the real question is, what you're asking is, what is the appropriate amount of new revenue that the city needs in order to sustain services and do it in a good way? Is that?
Yeah, because I would say most people might think, and all the great work that's happening, we're sustaining it. Is that true? Is that felt? Is there a tipping point to say, does it make sense that we can do this again if we're forecasting 2026? But where does it come a time where we're going to start to forecast so we can also prepare the public that there might start to be an operational increase here at the will of this term or next term? But what impact does this decision have on either needing to find those funds? And are we going to see it because of the growth of the city or not? But for me, there's a little bit of a gap there, whether it comes out of a tax reserve presentation and says, this is, at some point in time, operations is going to need something and we've got nowhere to go other than up on a tax levy. And is it going to be a huge jump? So for me, I think, is that something we can forecast as we go forward in the out years?
Yeah, so I think there's a few things through you, Mr. Chair. I think there's a few things. First of all, we've been very prudent in the sense that we have taken dollars, we've put them into the tax rate stabilization. We are doing our best to make sure that if there is a miss in terms of budgeting, that it isn't an immense issue for the City of Barrie. I think you'll see that across the reserves overall. That's part of the strategy in terms of having the investment reserve actually getting the fuel that it needed 20 years ago. The other piece to that I think is really important is you have to look at the work that's being done by staff across the corporation. So the idea that there needs to be increases because it's another year is just not one that I personally subscribe to, and that's been proven out. The work, and it goes across corporations, so I don't want to just pick one, but the work done by Thierry and his team on the reserve side, and then working with our finance department on the debt side has saved us millions of dollars. I think, Mr. CAO, over the 4 years, it was something like $8.5 million. And to put that in perspective, that's a 2.75%, almost a 3% actually, increase for the residents that's been avoided. So just that measure alone canceled out a 1% per annum increase in 2023, 2024, 25. And that doesn't take into consideration any of the other work that we've done to make sure that we're on the right track. The other piece I'll remind is there are sales of pieces of property that we said would eventually happen. Those dollars, I believe, were going to be directed into the tax capital reserve, or either that or the tax rate stabilization. There was a returning of $1 million by the police, I believe. Was it $1.5 million in 2 years? Tax rate stabilization. And so the work that's being done day in, day out, year in, year out now has positioned us that we are able to do what we're doing. And the other piece I think that's really important is that there's the growth that's happening it takes some time. I think it takes between 6 months and 18 months, depending on what type of unit it is. Is that correct, Mr. CAO, to get into the system?
Mayor Nuttall, I assume you're referring to MPAC when they come on the
Yes,
rolls?
sir.
Yeah, it's somewhere between 6 months and 18 months, correct?
And it depends whether it's a single-family dwelling or you've got a whole building coming online. But that has provided for heavy revenue increases. I believe in 2000, to be fair to previous councils, I believe in 2022 it was estimated into $3 million or something like that. Went to 4 million, went to 6 million. It's 6 million again. I mean, that's showing that the growth in number of units is actually supporting the business and budget plan here. And so I think when you add all those things together, it's a very sustainable picture. The question is really, I think, not a this year question, could be potentially a next year question. It really does get into a 27, 28, 29, where if the course we're on in terms of new units coming to market and therefore paying taxes don't continue, then you do have to revert back to, living within means, which sometimes means an increase on the operating side.
Just follow up to that, because I totally appreciate what you're saying, and not a criticism of where we've gone to. It is a future forecasting, right? We talk about 10-year capital and then revisiting that. For me, it's really looking at then a deeper dive on the operations, because, I mean, we've invested in lean processes. We've seen that come through. I think Mr. Rankin presented about just an analysis on every service point and has found efficiencies in practice. So at some point in time, those things, you grab the low-hanging fruit, now you're invested in bigger change pieces. But over time, looking at this to say, there's different sides of the corporation from a house, right, in the wellness of the city. And then what's a human factor? Because when we talk about operations, for me, we're also talking a bit about the staff. And so are we asking staff to do more? And at what point is there a threshold? And it might not be this year, might not be next year, but at some point in time, when we're seeing more and more coming from service providers too, and there's some things that just have to budge over time, where do we just have an eye on this before we hit a tipping point of reduced customer service, quality of service, and or, we are a great place to work. And so those are the things that are more on the corporation side from the health and well-being of the people that are doing the work. But 0% from an operations just means continuing to do great work, but with not a lot of net new dollars within the department. So I think an out-year focus, if we can build that into some of the strategies going forward in the next couple of budgets, or creating something that actually brings that back to start to say, what is the sense of us continuing to be an employer of choice? Are we still attracting the right people? Are we growing people up? Do we have room to grow people up, or are we growing them out? And I think that's important not to lose sight of that.
Yeah, fair point. But I would say that people go where they see a vision that they want to be part of. And the vision that we've put forward in front of the people of Barrie and in front of all of our staff is one that is exciting. It's one that's fast moving. It's fast paced. It's resulting in a university and finally getting a performing arts center. It's resulting in the roads getting fixed. One of the things I missed this year was going and pouring some stuff, I think it's asphalt, into a pothole. But I mean, these are things that we're actually investing in the frontline services. And when we invest in frontline services, it's not just for the residents who get to feel the impact of that. We also get to see our staff empowered with the dollars and resources to be able to have an impact in the community that they care immensely about. And so I think that there's a balance, and I agree. There's a balance between what our needs are on the capital side and what our needs are on the operating side. As far as I can tell right now, unless I get different information, the 2025, we're in safe territory. 2026 is going to be a lot of work to get to, and it'll really depend on the number of new units that are driving new revenue to come online. And I think one of the important things that we need to remember, and this was something that I was very surprised by data from Ms. Schlichter, is that we not only have the 2,500 residential units that are coming online, but there's on top of that, there's 3,000 jobs, new jobs created. They go somewhere. And those companies are paying taxes as well. They're putting in development charges to build. They're also, contributing back into the community. So I think as we come around to the next budget, that'll probably enlighten and give us more time to get more information as to where things will land going forward. But we are on the 2025 budget, and we do have staff saying through that, okay, yes, Mr. Mayor, this is where you've asked us to go, and we can competently do this. And we also have, in terms of that competency and stability, a third party coming in Standard & Poor's and saying that our plan is good. It's actually making the corporation be in more sound footing than it was last year or the year before or the year before that or the year before that. I look at all those things and I think that we're in very good standing.
So just thank you, final comment. I think that's great. And I think it's good for the public to hear that too, right? Which is why the zero, why are we comfortable here? And we've talked about it with some praise, but I think it's good to also talk about it as there is confidence in that through the budget you're putting forward. And for me, it's just looking at then having the conversation to say, yeah, it's probably not about this year, but it is the out year. And if it means that's tied into the tax reserves, and are they healthy enough? Are we also making sure that we're preaching that in the context of the whole corporation, not just what we've already kind of confirmed to them or forecasting tied to capital, but where will operations start to hit a point where we might need to see a pull? And again, I know we haven't even seen RVH come to the table or have a forecast yet to that.
Great, thank you. And just to touch on that exact point, I think when you look at how we dealt with last year's budget and also this year's budget, with what's contained in the binders, I don't know if the term holding the line is necessarily accurate. Might be holding the line when it comes to a 0% increase, but when it comes to what's actually contained in there from an operational standpoint, there are many staff positions contained in each of those two budgets. And that's why last year we opted to hire several firefighters, even though we knew that we weren't going to have a fire hall for them to be, because they were much needed resources to be able to assist the current situation. And also too, obviously it takes quite a bit of time and training be able to get them operational, but there's also other staff positions that were built into that last year's budget. So that's where I get where we're holding the line on the 0%, but when it comes to the true operational behind the scenes, there were many staff complements included in both budgets. So with that being said, is there any other members of committee that have any questions? Any members of non-committee? Councillor Hamilton.
Thank you, and through you. A couple, I hope, simple questions, but I know questions that come up from my residents. I think at the end of the day, we get kind of caught up in the weeds and looking at line by line, but most residents just want to know, how much more am I paying this year in my tax bill? And that's kind of the question I get. So I appreciated page number 11, which looks at the allocation of property tax bill and mentions MPAC. So I know last year, again, we held the line, but I had some residents contact me saying, well, my taxes went up more than the city told me to. And we had to kind of dive in and, oh, you got an MPAC assessment. But here it says that MPAC has, obviously since COVID, has not actually done a province-wide assessment. I'm just wondering if we can clarify for folks when they do receive an MPAC assessment, why some people receive it, why some people don't. I think it relates to if you've done any construction on your property or if there's been a change in ownership of the property. But I'm just wondering if we can clarify for people and if we have any intel on when that province-wide assessment might take place.
Through you, Chair Harvey, to Councillor Hamilton. Yes, you are correct. There has been no reassessment since 2016. So people's tax assessment that they will see on their tax bill will remain consistent unless there is a change in use of the property or a change in value, such as a renovation, something like that, that would have MPAC increase the assessed value of their property.
A follow-up to that. So does that include a sale then of the property? If
Just a straight sale?
Yeah.
No,
No,
there
so
would be
it's-
no change to the
So
assessment
it's
from a
if
straight
someone's
stat.
done construction or renovation and the property value's gone up, they would receive an impact bill, and that's why their property
That's
tax
correct.
percentage would increase.
That's
Okay.
correct. And even now, when houses are being built, the assessed value that is placed on them is a current value, but then it's discounted back to the 2016 assessment so that everybody remains consistent and comparable.
Okay. And then just to follow up, we have no intel in terms of when that provincial, province-wide assessment.
We don't know anything for sure. At earliest, it will be 2026.
Okay. Because I think, again, as we look to the future, just as, Councillor Kungl said, keeping that in mind too, because that could make quite a significant impact when that actually occurs. So just something to be mindful of. I follow another question, if I may, through you, Chair Harvey. On page 14, the comparison of Barrie taxes to other municipalities. Again, I get asked this all the time, and I think it is a good comparator to know where we stand. I know this is from 2023, and this was the most current as of the time of the printing of the binders. I just wonder when 2024 would be released, if that is something that will become available.
This is taken from BMA, and that information is taken from the FIRs. It would be, I think we get that information around August or September, so it would be another 9 months, 10 months.
Okay, thank you for that. I know I always get asked, how do we compare? I know we have the highest taxes in the province, so I just like to draw people's attention to that, share it with your residents as well. I think it's a good, good conversation to have. And then finally, I do echo, again, Councillor Kungl's comments, and I really appreciated Mayor Nuttall's background in some of that, but I do sometimes worry there's such pressure to maintain the line on 0% that services, it starts to affect services and the services that we offer. And I know staff are doing an incredible job, but we hear sometimes, yard waste, we're moving to another week, and now we're picking up and not picking up at all in December. Like these simple things, services at the end of the day are what matter most for people. So this is where I do start to wonder. Transit is another one, right? We've made significant changes to transit. It came up at infrastructure the other week that there's a lot of challenges right now moving to transit on demand and moving away from some fixed routes, especially in our neck of the woods and where there's low ridership. We had on the circulation tonight, it said there, if we were to move back to fixed routes, it would be an additional $2 million in operating costs. Should we do that? Like these are the things where our services keep taking hits because we're really trying to hold the line, and that's being felt by our residents. So, I think if I look at the top concerns I've heard this year, it is around transit, it is around leaf and yard waste pickup. We're continuing to cut on these stuff, yet we're having incremental increases in taxes, and some people are saying to me, up my taxes by another $200 and give me my transit and give me my leaf pickup every week, especially during, high season. So I do think there are some conversations to be had about service levels, and I know I'm accepting this, and I appreciate the budget that was brought forward. I appreciate, the tough times right now, but I do really worry about at the end of the day how people are receiving this from a service perspective, and I want to make sure that we're keeping that front of mind.
Yeah, great. Thank you for that question, and I do see Mayor Nuttall would like to respond.
Yeah, thank you. I think it's important to remember, actually, the decisions made on waste were not made by this council. It was actually made by the previous council. That decision resulted in an increase of, I think, about $6 million a year, CEO Prost, on the waste pickup, something like that, on an annual basis, from about 8 million to 14. I'm going on memory, and that's only going to escalate from here on out. So the idea that there's been a cut to waste services is just not accurate. There have been, I think, and the conversation I think we've had with regards to the spring specifically, because I think it was something that we heard quite consistently in the spring, was the new provision of every other week set days, and then also I think what added on top of that was actually the conversation about you can put it out on Sunday and then it wouldn't get picked up till Friday. And we worked through that as well. I think we heard much less in the fall than we did in the spring. And I don't know if that's because, the snow goes and then the leaves are there and everyone wants them gone, or if it's because it was a much smoother process in the fall. In terms of the transit service, I think we have to remember we've made a ton of investments, some of them very sharp, working with other municipalities to get the right types of buses, et cetera, available for us. A lot of our funding from transit is actually from ridership. And ridership then gets funded by provincial and federal governments in different ways. And the more ridership we have, the more funding we can get. And there's a balance there that we need to strike. When there's a change made, and I don't think it's a budget conversation, but when there's a change made and then it doesn't work, we're going to get complaints. And we did. And transit staff came back and said, hold on, we tried something, it didn't work, we need to rethink this. And then that came back, I think, was it last week or it must have been 2 weeks ago because I wasn't here last week. And so, you know, if we see these services, whether it's from, I guess it would be Bala on the waste side, or Ms. James Reed on the transit side, if we see, you know, massive requests because we're not hitting A, B, and C, or if you see it and want to go and have those conversations with them, I think those are important conversations to have. I haven't had those requests on my desk, and so I can't really speak to those going forward. What we have had is some changes to how we were doing transit. Some of those changes, I think, went a little too far, a little too fast. Those are fixed. We had some changes that were committed by the previous council, and you know, unfortunately, we inherit them. We do our best to implement them, and then go from there.
Thank you. Did you want to have any follow-up to that?
Yes, just a small thank you, and through you, I think just to say, you know, transit's been fixed. I understand there's lots of changes happening, and we're still in progress, and we gave feedback 2 weeks ago, and it is still a process. I just want to say I think we need to keep in mind at the end of the day, same thing with yard waste. We made some changes, didn't go over well, we reverted back, but at the end of the day, there were still complaints in terms of the frequency of pickup during high volume. So I just don't want to lose sight of that. I know we have reacted to complaints, and I think we've pivoted well, and we've been flexible, and we've done, you know, what we can do. But at the end of the day, I do think there are still some basic service level challenges that we deal with, and that's just matter of fact. I mean, there's always room for improvement. So I want to make sure that we are walking this fine line between keeping taxes low, yet really listening to residents' concern and offering the best value for money and service that we possibly can. One last thing, if I can, through you, and I hate bringing this up again, but the Southeast Community Centre, great to see it in here, happy to see it in here. Timelines have been removed on that, I think, from last year. I see it here, we're still in the pre-design, design phase. I know I'm going to get asked this, so I'm just wondering if there's any update. Are we going to continue to see for the next decade us being in the pre-design, design phase, just so I can report back?
Chair Harvey, through you to Councillor Hamilton. At this point in time, we don't own the land. So until that land is in the city's possession, completing the pre-design phase will not occur. And that's part of the reason why it's still at that stage this time. We are doing as much background work as we can while we work towards acquiring the land, but until that's complete and we own the land, then it's difficult to do some of the due diligence work that's required to finalize that.
Thank you. I appreciate that, and I don't want to put you on the spot. I know all the work that's going into it. I just have an accountability to my residents. This is something that we've been, you know, not we, the city's been working on for a decade, and I think they're looking and excited for, you know, something to move forward in this respect. So I just want to make sure that we're being totally transparent in where we are in the process, and I'm glad you're the one to relay that information. So thank you.
Great, thank you. I just want to double back a little bit on the garbage and the transit thing for a second, because I think a lot of the issues that people may have had, it's no different than when years ago when we changed from weekly to bi-weekly garbage pickup. Obviously, there's some growing pains because now people have to adapt with the way that they're going about their day-to-day business when it comes to the collection timelines. Obviously, the transition for leaves over garbage is much easier because you're not having to deal with garbage. But I think when you look at people have dealt with this when it comes to garbage without really any issues. And I do apply some kudos to Ms. Mack and her team for how quickly they pivoted when those issues arose, and because it was Ward 6 and 7 that was feeling the most of the pain because we were at the end of the week of that collection route, and so we were able to work through that. And I'll be quite honest with you, I've had one call in the past couple of months, and it was just in regards to maybe having one additional pickup closer to the end of November, because we've had a bit of a warmer spring than normal. But surprisingly, I've literally had one inquiry, and that was just last week, actually. So I think things have actually worked out quite well. Maybe not as smooth as everybody would like. And even with the transit, I'll be quite honest with you, I welcome the transit on demand, because it's actually providing transit to areas in my ward now that haven't been able to get it. Because, like, I mean, we've got a new subdivision that's separated from the rest of the ward a little bit. So I do welcome it. It's a way to provide transit. Obviously not what we would call as traditional transit, but I think it's going to work well, and I kind of look at it as like Uber transit almost. But we'll see. We'll see. Obviously, I know you spoke about the issues last week too, so we'll see. And I've committed to Miss James Reed to be there day one of Transit on Demand, and we'll see how it goes, and I'll report back. With that being said, I see Councillor Morales.
Thank you, Chair Harvey. Uber, but not. I want to have a question here. So there's and thank you to Councillor Hamilton for bringing this to refreshing this to my attention. It's on circulation list regarding transit. I'm going to ask it now because we have the relevant staff here and we're having the conversation. So it's a one pager. So in the response section it says there are numerous factors that need to be considered, such as service coverage, frequency or hours of operation when developing specific routes, and the costs associated with that routing. Staff would need specific direction on some of these items, but at a high level, and I acknowledge this is a high level, and while maintaining the current transit on demand coverage area, transitioning back to fixed routes, it says transitioning to fixed routes, would result in a net increase in operating costs between 1.4 to 2 million, with an initial capital expenditures increases of approximately $5 million. And this is based on the current network and continuing with the plan to service Salem and Hewitts. So I guess my question to the relevant staff member is this: is the projected, I understand is a very high level. We asked the memo, we got memo's worth of information, so I'm not saying that this is not enough, but the projected net increase in operating of 1.4 to 2 plus a capital 1, that would, let's go with the 1.4. Is that 6.4 projected increase an increase from where we are now, or are you comparing it to the baseline of what it cost when we still had fixed routes? Because somebody looks at them, that's a scary number. But I presume we saved money going from the fixed route to a transit on demand. So it's not really it is an increase. Like if my accounting professor from 8 years ago was here, he would say, no, it's technically an increase because we're going off this year's new number. You don't get to pick and cherry pick the historical one you want. But from a practical perspective, when we're talking to residents, it's an increase, but we saved a lot of money from the previous one. So I just want to understand that potential 6.4, and I understand it's a projection. Is that from the new reduced cost of transit when we did the transition to transit on demand?
Through through Chair Harvey to Councilor Morales. So the transition in June from the old network to the new network didn't actually save the city any money. The city continued spending the same amount of money. The transition was able to do certain things like add the 400 express route at no cost. And so when you look at things like transit on demand, for example, transit on demand allows you to deal with kind of the, let's say, directness and frequency versus coverage discussion. And so transit on demand allows you to maintain coverage throughout those areas at the city, and taking them to high destination points and things like that, and then allocate those resources to, let's say, higher frequency routes or potential higher frequency routes. So there was no actual budget savings by moving to the new route. And I think to answer your question, if council directed us to go back to fixed route as well as replace the TOD that was there pre-June, it would be in the range of the 1.4 to 2 million of additional operating costs, plus the 5 million of capital. So
through you, Chair Harvey, so thank you, that was really detailed. So would it be fair to, and correct me if I'm wrong on this, this is for what I'm going to disseminate back to people who are asking, Mr. Forsyth. So the transition between fixed routes, a fixed route system, to the transit on demand fixed route hybrid system was really just a net neutral reallocation of existing resources. It didn't save money, it didn't cost more relatively. Again, I'm not talking down to the dollar, but it was just a reallocation to more effective, like the 400, et cetera. Would that be a fair summary of what you said?
That is a fair summary. I should note, that is a fair summary on the operating budget side. I should note on the capital side, we actually save a significant amount of capital dollars because you move from fixed routes requiring a 40-foot bus to the transit on demand service requiring the smaller buses that do come at a significantly less cost. So we were able to save capital dollars that way. And that's why moving back to the fixed route would increase the capital side too.
Just to interject momentarily, just so you're aware, if it actually is part of the motion on General Committee's agenda tonight in regards to the adjustments that you're asking the questions about. So I don't know if you want to hold further questions for the General Committee meeting later tonight.
No, I'm enjoying the discussion now just because we have a lot of the staff. I know Mr. Forsyth will still be here. It's just relevant.
Yeah, no, I'm unfortunately, Councillor Morales, I'm going to
okay. You
cut
can say
it at this point. I would ask for the discussion
Yep.
to come up at General Committee.
Sounds good.
And that way others can ask questions too, because we do have another committee meeting in 45 minutes.
Sounds good.
Do you have another question that's unrelated to what you were just asking?
A question unrelated to what I was asking? No, thank you, Mr. Forsyth.
Okay, great. Thank you. Councillor Rietma.
Thank you, Chair Harvey. Just a couple of comments. One of them is, if you want a councillor's phone to start ringing, just change the waste collection or change their buses. That is guaranteed. I think the comment that I wanted to make is really in Mr. Gillespie's presentation on page 13, where he talks about the tax increases and decreases. And interestingly enough, in order to maintain the service levels that we've always had, we're going to spend this year another $7.2 million. So, it's not like we're not spending money, but we're spending $7.2 million. Then, in addition to that, for new service levels, we're spending an additional $700,000. Now, that all works out to zero when you take the improvements in our debt management into account and the assessment growth. So I think, we are going to be providing better services, more services to our residents, even with a zero increase in operating. My question to Mr. Gillespie is, this past year, we received, quite a few $1 million from the federal government and the provincial government. I don't see that reflected in this budget. So is there something that I'm missing that, is this budget based on receiving X dollars from the province at some point, or am I just not interpreting that correctly? Okay, I'll let the mayor answer.
Yeah, thank you. I'll go to Mayor Nuttall.
Yep. Sorry, just to jump in. First of all, some of those dollars we did actually already allocate to the community improvement plan. And those dollars, I believe, are close to spent for 2024, if I can get a confirmation from the CAO.
Yes, Mayor Nuttall, I'll defer to Ms. Banfield, but I believe around $9 million was put through the CIP.
Out of the 10, call it? Perfect. So we're 90% of those dollars are spent. The remaining come in funding on an annual basis. So they don't just write us the check for, I think it was 33 million-ish between the feds and the province and say, here you go to town. We have to report back and we need to show that we're doing what we said we would do with the money and we're not taking it and, I don't know, building an ice rink or something. So that will come year after year, those dollars in. I think it's also the expectation that the community improvement plan, which I think you're going to come forward with a report that's not in the budget in,
Q1 of 2025, Mayor.
which will show the allocation of those dollars to the CIP and what they're looking at doing with the CIP going forward. So they're in there so far as this year's been spent, next year's isn't received yet. There's going to be another staff report coming forward that outlines how that spending will take place based on the federal contributions and the commitments we made to the federal government when we accepted their dollars.
Okay, thank you. That's helpful.
Great, thank you. Any other members of non-committee? Councillor Harris.
Thank you, Chair Harvey. Yeah, and I appreciate the comments made by members of council, just to make things clear to the public as we kind of go through this and see what's there, maybe what's not there, and what the future holds. And just on that, I just referring on page 180 and maybe through you, Chair Harvey, to CO Prowse. Am I correct that as we look towards the next year, we're not staying flat with staff, we're actually adding 13 full-time staff and 12.2 casual part-time staff. So we're actually adding staff for the coming budget?
Through you, Chair Harvey, to Councillor Harris, that is correct. I believe the number is 13 full-time equivalents, yes.
Okay, thank you. Yeah, and just again, just to make a note of that, we aren't staying at status quo. We're actually adding staff. And we can debate on how many and if that's enough, but certainly it's not staying as is. And as Councillor Reitman mentioned, the budget is not the same. There's more investment. So thank you.
Yeah, thank you for that, Councillor Harris. Any other members of non-committee? Councillor Corser.
Thank you, Chair. I do have a few questions, but I think I'm going to use a magic email address for that. I do have a question while we're on the conversation about services and staff levels. With our continued significant salary gapping that is being done with the city that's continuing on this year, like on page 4, right in the beginning of the business plan overview, there is, I can read it to you, to address the city's current financial realities, decisions need to be made that impact services and service levels now and in the future. Is this budget going to impact service levels? That's my question. I guess it would be through you, Chair, to CAO Prowse.
Through you, Chair Harvey, to Councillor Corser. Councillor Corser, I think the answer is yes and no. The reality is this budget will increase service levels. Typically, that is staff's position each and every year. But there will be areas, as we always do, we recommend to council to consider changes. Earlier, it was talked about service level cuts, et cetera, et cetera. Staff are very clear with council when there's a service level lowering recommendation. Oftentimes, we will recommend to council best practices. As was the discussion with the leaf and the garbage and the transit, and I can list many, many things going back over, frankly, decades, and I think Chair Harvey referred to the two-week change on garbage back in the day, and you know, to the residents of Barrie, that was end of days. The world was not going to continue spinning if we stopped picking up garbage every week, and I know that because I lived through it. The reality is, at the time, staff recommended to council this was a more viable path for the community, but all change management is difficult. The council of the day made that decision. This council has made multitudes of decisions that are not necessarily service increases or decreases, but they are changes reflecting best practices. And to Councillor Hamilton's point, sometimes they don't land the way they are intended. And our job is to go back and fix them. But I will tell you that this budget includes more money, more services, but at the same time, the City of Barrie is facing some pretty stiff headwinds, as are all municipalities. We've outlined the costs. You know, there's a couple of contracts that are noted in here between waste and transit. Standing still, no real improvement in service. It moves by almost $4 million a year, becomes $4 million a year more expensive. So our job as staff is to juggle that and try to continue to deliver council's priorities inside a funding envelope that council decides is affordable. And that sits with the 11 people here, led by the mayor, as the budget he puts together. So if somebody pointed to me that somebody said, is this specifically a service level reduction? I think you would have a difficult time finding that in this budget. I think you can point to many service level enhancements and certainly some efficiencies and simple changes. Invariably, a year from now, somebody will point back and say, well, you said that was a change and that didn't work out so well, Michael Prowse. And I'm sure, because we don't know. And hindsight is 20/20. But the reality is we are not planning service level cuts. We are planning service level enhancements through efficiency, cost savings, and frankly, yes, more money. The difference is we are not simply throwing money at challenges. We are trying to identify efficient ways to get out of those. So that's a very long answer to a short question, Councillor Corser. But no, I don't believe that this budget reflects service level cuts. I believe this budget continues to reflect service level improvements for the residents of Barrie.
Thank you. Actually, that was a very informative answer, so I thank you very much for that.
Great, thank you. Any other members of non-committee? Great. So we do have 7.1 is on the floor, and is there any further discussion in regards to 7.1? Okay, if not, I will call the vote. All those in favor? Actually, it's just members of committee. And that passes. Everybody's so excited. Everybody wanted to vote on that one. So that concludes the Finance and Responsible Governance Committee meeting. This meeting is adjourned, and our next committee meeting is at 6 p.m.